Some baseball trivia on today's podcast. Hi, I'm Neil Gordon with Augusta Business Daily. But who is this gentleman blindfolded? I'm going to have to ask a question. A bald baseball player. Did you ever perhaps play in a championship, MLB championship series?
I did, Neil. And did you just call me bald?
No.
Okay.
Because you have a beard.
Thanks.
And this gentleman has ties to Augusta. Are you Cal Ripken?
I am not.
Former owner of the Green Jacket.
I'm not.
Oh.
Close.
So why are you coming here today blindfolded?
Well, that's a great question, Neil. I would say it's good to see you, but I can't really see you right now. So
Understood.
I wanted to talk a little bit about health insurance and what the insurance companies want you to see. Right now, I can't see anything, and that's how most companies approach their health insurance, because that's what the insurance companies want them to see. They don't share any data, and what data they do share, if you're large enough, it's the data that they want you to see. I have a hard time being a consultant working with those parameters, and I know that insurance, companies that provide the insurance have a hard time making a decision. Health insurance is now one of the top 2 or 3 items on a P&L for business owners, and they're going in blind trying to make that decision. So I wanted to play a little game and just have a little fun with how we approach it. It's really difficult to make a decision this way. I wouldn't buy anything like this. You could be selling me a Lexus, or telling me you're selling me a Lexus, and when I pull my blindfold off, it's an old beat-up car.
Oh.
Not a good way to approach the market. So I, as a firm, are trying to change that mentality and trying to expose the why behind insurance and help my clients understand why they're purchasing the insurance and what they're getting.
Well, we have a little hint as to who this gentleman is. Can you see above my left shoulder, it says, the Pennant Group. Could you remove the blindfold and share with our audience? Ladies and gentlemen, Mr. Tom Mastny.
Yeah, most people probably want me to put the blindfold back.
No, not at all. Why do you think insurance companies have this blind leading the blind type mentality?
We don't have enough hours to get into the details of it. But really, if you look at our economy as a whole, our economy is in a recession. But over the last 10 years, the one industry that has not been in a recession and continue to not be in a recession is the insurance industry. Their stock prices have gone through the roof ever since the enactment of the ACA, or as we know it as Obamacare and the ACA. Insurance companies have been making money hand over fist for the last 8 to 10 years, and they don't want us to know why they're making their money and how they're making their money, but we as consumers, I think, have earned the right to that.
And if you'd like to learn more about clearly how innovative Tom is, just go to thepennantgroup.com for more information. And I'm assuming, Tom, this gets passed down to agents of the insurance companies, and they have to make a choice just like you. What do I offer to my consumers? So what do you try to do that's a little bit different?
Yeah, to me, it's setting expectations. It's setting the expectations from an agency, but it's also setting expectations from a client standpoint. I want them to know how our industry works, why it works, so then as we approach renewal, they have a better understanding of what their consultant should be doing, and then what the expectations of the employer should be. As we approach renewal in the state of Georgia, we get kind of backed into a corner. We're given 60 days to make a decision. And normally we get our renewal from the insurance carrier 60 days out. If we're lucky, it's 75.
Okay.
But in that two-month span, we have to meet with the client. We have to address their issues of the health care that they have, and then go to market, as we call it, which is to look at all the other carriers in our market and get quotes from them, and then present that to our employer. And if they need to make a change, then we have to do all the paperwork behind the scenes give the option to their employees. We are really squeezing this into a 2-month window, which turns into about a 2-week window, which doesn't leave a lot of room for error. Not a good way to approach the situation. It's very stressful on both sides, and a lot of things fall through the cracks. My goal as an agency is to fix that as much as possible. I think all brokers and consultants should be proactive. They should be having regular conversations with their employer groups, and the employer groups should expect that. If we're having conversations throughout the year on our market and what health insurance is doing in our market and what we're seeing from other carriers, that at least is a proactive conversation towards renewal, which allows the renewal process to be smoother.
And you're kind of planting a seed along the way. Just from your experience in the CSRA offering employee benefits, what are some types of things that can change after someone has had insurance for a while and then they go through the year? What would impact it?
One thing that gets looked at on a regular basis from the carriers throughout the year, and most employees don't know this, and most employer groups don't see this, but their prescription drug list that is covered, what drugs are covered and how they're covered by that carrier, that changes twice a year. And that happens behind the scenes, and that can affect the copay throughout the year that employee pays when they go get a prescription. That's not talked about. It's not understood, and there's a reason behind that. That can be a completely different series of podcasts when we get into the pharmaceutical side of things. That's really where the change needs to happen. That's where the transparency needs to occur. That's going to be the hardest fix.
Well, if you don't want to be in the dark on your health insurance and employee benefits, your most valuable asset, go online to thepennantgroup.com. It's a very impressive website with a lot of options and resources. And then Tom would be glad to meet with you. Thank you so much for the time. Appreciate it.
Anytime, Neil. Appreciate it.
And, of course, we're a service of Get Up Productions, and so pleased to have the podcast filmed here in downtown Augusta. But they're available to help really in any area for any organization or a business. Here are some of the social media ways you can get in touch with them. Tell them Neil sent you. I highly recommend him. Well, we're so pleased to welcome back into the program the founder of the Pennant Group, Tom Mastny, sparing no expense for us, going to Staples, and we hit the easy. That was easy. Is health insurance really easy?
Health insurance is not easy.
Okay.
However, it's considered easy by certain people, and it's the insurance companies want you to make the easy decision, and a lot of consultants and brokers make the easy decision. And unfortunately, like in our previous conversation, we're backed into a corner, and we don't have a lot of time to make a decision when it comes to our health insurance and what our options are. So a lot of times we hit the easy button and just go with what is comfortable, what's the status quo. We don't want to disrupt anything for the employers and employees. So we hit the easy button and just roll on, even if it may not be the right decision.
You would think companies now in today's economy would shop around. Or are they, and I know you have a blindfold up here from a previous episode that we did, but is it just kind of blindly, I don't want to deal with it, let's just keep it going, keep it rolling?
Yeah, insurance is not a sexy topic, right? Nobody enjoys talking about insurance, and part of the reason is we don't know why. We don't know what's driving our costs, and we don't know what we can do to control those costs. We are very limited in what you can do if you are a certain size employer group. That starts at the state level, though. So, I was at a conference down in Florida a couple weeks ago, and we had a representative from Texas that was talking about legislation that's being passed and presented to the state Congress in their market. What needs to happen is there needs to be a movement across the state of Georgia presented to the local representatives to discuss the non-transparency of healthcare. We want and deserve the data behind our premiums. We need to understand why our premiums are what they are and why we're paying an exorbitant amount of money. There's legislation in Florida that's been presented. It's sitting on the governor's desk that is opening up the curtain, per se, down to 5 employees. So today's market, if we're an employer and we're under 100 employees on the plan, we don't get any data. So I don't know why I'm paying, it could be $1 million for my premium. I don't know why I'm paying $1 million. And then when I get a 20% rate increase, I don't know why. We need to know why. We deserve to understand why. And that's the only way that we're truly going to lower the costs is when we start seeing that data, and then we can make the adjustments. That'll lead us into a next discussion in an upcoming podcast on 3 different funding mechanisms. But ultimately, if the consumer can get the data and they see the data, I think they're going to be upset in what's driving their costs and who is making the money. So ultimately, I know I've rambled away from how do we make the easy decision and why do we make the easy decision. I think employer groups make this easy decision because they're backed into this corner and they don't know where to go. Mm-hmm. And unfortunately, a lot of consultants don't want to learn what's new, right? If we learn what's new and what's coming, that means extra work, and that can be time consuming, and it can be difficult because learning something new is challenging. Mm-hmm. So we hit the easy button because we don't have the time to get to the new product, and we don't have the time to understand and educate ourselves. So it's the easy button for us, and it's the easy button for the employer because they don't want to disrupt the apple cart.
Wow. We're continuing with Tom Mastny, and again, you can go online to the pennantgroup.com. Tom used to be in the major leagues as a pitcher with the Cleveland Indians, hence Progressive Field. No tie to Progressive Insurance. Of course, Tom does health insurance and employee benefits. And again, we will in the next time talk about some different funding solutions. But beyond what's happening in Congress and regulations, with your boots on the ground, what do you try to do to educate people that you get in front of to look at some alternatives until maybe the government steps in?
Yeah, I think we have to meet our clients where they are. And I think that's one thing that gets overlooked in our industry, as the broker consultant sometimes makes a decision for the client. I don't want to make the decision for them. I want it to be our decision. I put myself on the side of the table of the actual employer making the decision and say, hey, what is right for your company? I think that gets overlooked because there are different reasons for different products. There is no one-size-fits-all approach. And with insurance carriers today and the blindfold that they've put over the consultant and the employer, they are dictating for us, what our coverage should look like. And something needs to change there. It's an unfortunate situation. I think we're working towards a path to get there. I've got a good friend of mine. He's a direct primary care physician. He is in the process of joining with 3 other providers here in the market and offer direct primary care solutions. To me, that's an easy fix for some of these employer groups or actually consumers that either can't afford insurance or want more personalized care. Employers can put this in their group at a very minimal cost, but really it gives the employees easy access. I won't say 24/7, but basically
not catastrophic, but
yeah,
most everything else.
But it's a good way for them to see a doctor, a very good doctor, that can service them from A to almost Z and even offer prescriptions, and they're not having to pay that copay on a per visit basis. So that's an easy fix. And then there's other products that we can layer on top of your health care or different things that we can do to your current health care plan that can make that transition while we wait for the market to change.
And I should say, full disclosure, I'm a believer in that. Our family has the primary care coverage, and one of our employees, as opposed to trying to, I'll pay 50% of, go look for a plan or whatever, I said, I'm going to pay for this. And then he, was smart with his wife's insurance. And so we just, I guess it's about being flexible because
right.
Yeah, that's that side of it being easy. I suppose we just have to make sure that we're dealing with the right consultant and they don't just take the easy way out.
That's correct. Change is scary, right? Whether you're changing consultants or whether you're not changing a consultant, but you're changing a product or you're taking a look at it. As this becomes a larger expense for the everyday consumer. It's also becoming a larger expense for the employer groups. This is a top 2 or 3 line item, and hitting the easy button on a 10%, 20% increase every year is not sustainable. At some point, we're going to have to remove that, take a chance, or roll up our sleeves and actually do some work. It's about getting out ahead of it. I look at this as most companies, I'm going to say all companies, if you offer a healthcare plan, you're in the healthcare business. If you're selling widgets, you're not a healthcare specialist. Mm-hmm. But if you're providing insurance for your employees, you are in the healthcare business and you need to manage that expense. So, you need to look at your consultant, whoever that is, as that supply chain manager for you. We talk about supply issues, right? That's kind of the big buzzword right now is everybody has supply issues. Well, what are you doing to manage that? So look at, healthcare and employee benefits as a line item and as a supply, and let your consultant manage that for you. And when you pull back those layers, they need to be managing, your primary and specialist, your office visits, your inpatient, your outpatient, and your prescriptions. Those are the 4 pillars of what's in your insurance product, and that's what we need to manage.
Well, what struck me about what Tom just said is I'm guessing the number one line item would be labor and employee costs. You wouldn't just automatically give your employees 10 or 20% raise every year. I mean, it has to have the value. So just invite you to go to the pennantgroup.com and maybe look at a different way of doing things. And I think it will be easy if you do. Tom, thank you so much.
Appreciate it, Neil.
Absolutely.
It's a pleasure.
And Tom and I are pleased to be here at the podcast studios in downtown Augusta. If you'd like to look at some other examples of what they do, please just go to their social media channels. And perhaps your organization or company would like to get involved. I've just greatly enjoyed visiting with business people like Tom to explain a little bit more about why you should get involved for sure. You may feel like you're sort of stuck on your healthcare coverage and you just sort of sign on each and every year, but there are some options, and that's why we have a professional expert and consultant, Tom Mastny, from the Pennant Group, joining us. Tom's a former Major League Baseball player with the Cleveland Indians and has made his home with his wife, a local attorney, here in the CSRA, and has been helping dozens of businesses, which is really fantastic. And Tom, I know in previous segments we just sort of talked about doing things the same old way. And what do they say about that's the definition of insanity, right?
It is.
Yeah. And I guess you wanted to talk about maybe some different options that business owners have.
Yeah, we're going to get into the meat a little bit. In previous podcasts and episodes, we've just talked in generalities. We haven't really gotten into the meat of what their options are out there. And these are not the end-all, be-all, right? But these are really the 3 funding strategies and funding mechanisms that underlie health insurance. We could break down each funding mechanism, and that could be a 10-part series. I mean, there is a lot to know about insurance, and it is not, and I've mentioned this before, it's not a sexy topic, right? It is a boring, arduous topic, but
expensive topic.
It is extremely expensive, extremely important, right?
Yeah.
It, it is probably the number one reason that consumers go into bankruptcy is because of healthcare expenses and medical bills. So finding the right product and managing that correctly is vital. As I've mentioned earlier, this is a top line item for most companies. So it's not only a top line item for companies, but it's a top line item for households. And making sure that the right product is in place and the right funding mechanism is in place can benefit everybody.
You're right. I mean, some homeowners pay more for their family health insurance than their mortgage, and then you take it to the company level, and it's probably just below labor. How many companies do you think are kind of fully insured?
I would say it's about 40%
Okay.
are fully insured. Reality is most companies, about 60%, are self-funded or partially self-funded, but those are going to be your larger companies.
Right.
That's starting to trickle down. So we're starting to see that, and it's starting to open up more options. Companies are getting creative. Consultants are getting creative. Insurance companies are getting creative. So we're seeing a change across the industry, and it's exciting.
Define for us what fully insured means. Does that mean that the company is just paying 100% of the premium?
No, not exactly. So let's go into what insurance is, right?
Mm-hmm.
So insurance is a transfer of risk. And it's really what it is. We're taking the risk of the unknown and we're transferring that to another company that we're paying for, right? And it's a game,
Yeah.
right? I'll tell you this: there are a lot of formulas and actuaries behind the scenes that are taking educated guesses and using data to make those predictions. So it's not as risky as it may seem for that insurance company. There's a lot of levers that they can pull behind the scenes to make up extra money. And that's what I want to expose in future podcasts. We don't have enough time today to discuss that. But really, when you look at insurance and employee benefits, health insurance is what I'm talking about. There's three main funding mechanisms. You've got fully insured, you've got level funded, and partially self-funded.
Mm-hmm.
Okay, and then within that, there's different parameters. I want to talk about really fully insured, partially self-funded, and then captives. Okay, I didn't mention captives. It's a different funding mechanism that I want to spend some time on. But really, the products are either owned by an insurance company or they're owned by you. Okay, so when we look at a fully insured product, it's not the premiums that are 100% paid for by the insurance company. The premiums are what you, the consumer, pay. What is 100% paid for and covered by the insurance company is the risk. Okay, so they are taking all of the risk behind the scenes. You are paying a premium, and that covers that risk that they have come up with and they've predicted. So you basically pay them, you see your doctors, and you forget about it. You don't have any more transfer of risk. You're just paying for their coverage. It's probably, like we had in a previous, the easy button. That's the easiest form of insurance, where there's not a lot of work from an employer standpoint, but it's also the least transparent form of insurance.
I did want to mention that Tom's website is thepennantgroup.com for more information. And you mentioned that some of the risk or partial risk could be on the insurance company and some could be on the company themselves. But I'm very curious, what does captive mean?
Yeah, so captives, probably not the best term to be used, right? So when you think of a captive, it means that you're held hostage.
That's right.
Right? That's not what a captive is in insurance. So I'm gonna dumb this down because, as you mentioned, former baseball player.
Sure.
I'm a simpleton, right? Like I just need things broken down in the simplest form so I can understand it. And then once I understand the simple form, then I can go down rabbit holes to better understand that product. So like I mentioned, we've got fully insured, we've got partially self-funded, and then we have captives. Those are the three main funding mechanisms in today's market. Okay, you've got one fully insured that's owned by the insurance company. You've got partially self-funded, which means you are paying that risk, and then there's an insurance company helping, so there's partial of both. And then you have a captive, where captives are a group of like-minded employers. That's the key word, like-minded.
Mm-hmm.
They don't have to be in the same industry, but they need to be like-minded and trying to achieve common goals where they have joined together to share risk.
Okay.
Okay, so there's a number of different captives. There's, a couple in our market here, but it seems like a new one pops up every single day. Finding the right captive is a personal fit, but it's really finding the like-minded employers within that captive that make the most sense.
The other thing I'm curious about is for employers that are watching, should they know what the health is of their general workforce? Does that matter? Does that factor in?
It does. I mean, we talk about HIPAA, right?
Mm-hmm.
HIPAA is kind of that buzzword that we don't want to violate.
Yeah.
Right? People's privacy is important. We don't want to violate that. But it is important for the business owner to understand what is driving their costs. Not who, but what. So is it prescriptions? Is it medical conditions? Are they one-and-done medical conditions? Which I mean by one-and-done, was it a large surgery that is no longer going to affect the plan? So a one-time procedure that affected their rates. Or is it an ongoing condition? We don't need to know who. We need to know what and why so we can make educated decisions. And depending on the funding mechanism and the size of the employer, that's what really opens up as you get into these. So I want to touch base. We talked about fully insured, partially self-funded, and captives. And there's still probably some confusion. So I'm going to dumb it down a little bit
Go right
more.
ahead.
Okay. So think of this as, I can explain this to my 10-year-old, and he kind of got the concept. And it just happens to be my name when we look at an acronym standpoint. Like it's TOM, right?
Okay.
So it's fitting. And I heard this. I can't take credit for it. I heard it on a podcast, but it just made sense. So when you look at fully insured, it's their risk. T, right? Their risk.
Yeah.
When you look at partially self-funded, there's two layers. There's my risk and their risk.
Mm-hmm.
Right? So on a partially self-funded, I am paying all of my employees' claims behind the scenes up to a certain dollar amount.
Okay.
At that dollar amount, then the insurance company picks up the rest. So that is there above the line. I'm paying for all of it below. That's mine.
Okay.
That's my risk that I'm taking. So when I'm partially self-funded, that means I'm partially taking risk, and an insurance company is partially taking.
Would it be our?
So our is a captive.
Okay.
So our adds in a third layer.
Okay.
Okay. So you've got their risk, which is
Right.
the insurance company above a certain threshold, and then you have my risk below that threshold, and then in the middle is where these like-minded employers have gotten together, and they are sharing risk between the companies, right? So we have Tom, right? It's theirs, ours, and mine,
Mm-hmm.
and then theirs, ours, mine. So my job as a consultant is to sit down with you, the consumer, and you, the employer, and say, what makes the most sense? What are we trying to accomplish with our healthcare plan? Why are you offering it? And then what does this look like in the future? Let's be proactive about it versus reactive.
You heard it. You need to get in touch with them because you need to be part of the Tom's program, basically. You'll fit into one of these categories. Guaranteed, Tom's program could work for you. Just go online, to the pennantgroup.com, and there's actually some explainers in addition to what we've learned here. Tom is also one of the thought leaders on AugustaBusinessDaily.com, so you can go to that website and learn some more. It's all about information, because you said health insurance is not maybe the sexiest thing, but if you're paying money, you got to be careful.
That's right.
Yeah.
That's right. I mean, it's, to me, we as consultants and we as insurance specialists need to meet our clients where they are in this journey. Mm-hmm. I've said it before. It's a crawl, walk, run, fly approach. I would love for all of my clients to be flying, which means not worrying about insurance and just
Mm-hmm.
paying claims, but we're really managing those claims. Reality is we're not going to get there. I mean, those are pipe dreams, and I'm aware of it. But if I can meet the clients where they are and take them down a journey that makes sense for them, and we get to their desired outcome, then we're changing the game for them.
Excellent. Well put by a former Major League Baseball player. Changing the game of employee benefits. Tom, thank you again for the time.
Always a pleasure.
Okay.
Thank you.